Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Welcome to this weekday special episode. We're delighted to welcome back to the podcast Derren Martin, Director of Valuations at CAP HPI. Derren's joining us for his regular monthly update on how trade values are performing. So welcome back to the show, Derren. How's life in the world of valuations?
Thanks, Curtis. It's been an interesting month, to say the least. Lots of inquiries from the press and from customers following various things that have been happening in the market. But yeah, it's been a very busy time, which isn't necessarily reflected in the average movements, but it's certainly reflected in all the detail.
Yeah, and we will get into some of that. We can't not do, and people will be, probably guessing what we'll get into a bit of the conversation about. But yeah, you're right. I think you've been a little bit busy of late. So as always, I mean, it's great to have you back on. But I think, shall we start by, as a way of introduction to what's happening and what you just referenced there is, what has happened to that? Obviously, the headline index figure of that 3-year 60 from January now into the month of February. How is that performing, and what's the sort of headline statement on that?
Yeah, so with the overall sort of averages, as I say, don't really paint the picture, but the actual drop, the actual movement at 3 years 60 is a 0.1% positive, which obviously is very negligible. The detail behind that, without going into the sort of fuel type detail, which we'll talk about in a while, I guess, is that the market started off relatively stable. We saw more data over Christmas than we'd seen ever before, I guess, with auctions being online, or a lot of auctions being online, and people now prepared to buy online. There was a lot more activity than normal. I think our volumes are about 25% up on last year over that sort of 2-week holiday period. And it started off relatively stable. We did drop some values based on the data that we saw then, but since probably the sort of the weekend of sort of 7th, 8th of January, the market picked up considerably, and we've then, any drops that we kind of made on average have negated, and we've ended up with a small positive movement. So the devil really has been in the detail in January, and live has kind of come into its own again after a bit of a weakish start. It's strengthened throughout the month. Conversion rates at auction have been really strong. We've seen more data as the month has gone on, and well in excess of what we saw in January last year. So it's been overall, it's been a positive month. The retailers you speak to are upbeat. They've had a better January than they may have thought they were going to have in December, with all the things that are going on with the economy. So it's it's strong there, but that 3-year figure doesn't paint the whole picture at all.
And considering the seasonality shifts that we've had and the challenges, and you look back to sort of 2020, and we were, it was a very positive start to 2020 until we went into the lockdown. How does this movement compare to sort of previous Januaries, and where you'd normally expect the market to be January into the month of February?
It feels quite similar, and the movement is quite similar. You can often get either a sort of a level month or slightly up or slightly down. There's rarely a large movement in January, and it's usually quite a positive feeling about the market as people come out of Christmas and start to hunt for a used car. I think the difference this year was whether that was the concern about whether that would happen. I don't think there was any dealer that we spoke to in December that was stocking up for a bumper January. They were all a little bit wary, and I still think they're not massively stocking up. I think they are picking off the vehicles they know they can sell. They're confident with selling, replacing sold orders, that type of thing. And there are still difficulties sort of getting the right stock. What we have seen is older cars have performed well. We've been putting values up of some older vehicles. Condition seems to be less of an issue than it has been in over the last few months. Those price point vehicles are being sought after, and dealers that we've spoken to that have put their cars through auctions, they're their trade vehicles, they've been really pleased with how they've performed. So there are some strong values out there on older vehicles. And we've put at 5 years old, we've increased values by, this is an average, obviously the devil's in the detail, but by 1.5%, which is about £100 in Cap Live. At 10 years old by over 3%, which is £120. And when you look at that by price band, under £5,000 cars have gone up by 4%, £120. £5,000 to £10,000 by nearly 2.5%, which is £160. So that cheaper end is performing well, and values have increased at that end.
And Derren, before we talk specifically about EVs, which I guess is the big story this month in terms of values, which vehicle sectors actually stood out in terms of rises and falls over the course of January?
Looking at sectors, city cars, again, that sort of value end, they've gone up by over 1%, which on a city car isn't huge. It's a marginal movement, but they've gone up. What else? Lower medium cars have gone up at the 3-year point, but at younger ages have gone down slightly. And super minis have performed well. Again, that sort of the cheaper end. So all of those three are probably the cheaper cars. That's sort of the general trend, but nothing has been too adversely affected by in terms of sector. SUVs have moved by a sort of a nominal 0.2% down on average. So it's not really the sector that is the main talking point.
And any particular standouts in terms of age bands, in terms of performance?
Yeah, it is those age bands, those older cars. As I said, the 5-year, 10-year, they're the ones that are the positives. 3 years gone up slightly, as I say, 0.1%, and then 5 and 10 years have gone up by more than that. And at younger ages, some of those cars are a little bit too close to new car prices, especially when you sort of cater for discounts and that type of thing. So they're the ones that have come down, but again, not dramatically.
And moving on to EVs, I mean, it was another challenging month for EV values. Once again, with them falling month on month. How much of an impact do you think Tesla's global price cuts had on that?
It's actually quite difficult to say what the impact of that was, because values have already been dropping. We've been talking about this probably since October, with values coming down. There's more stock in the market. There's been a little bit of, probably not a little bit, there's a bit of anti-EV feeling from the consumer based on some of the press that's been around over Christmas with long queues to have your car charged. There's you have to take into account the fact that electricity costs have gone up, so it costs more to charge your car. And the main thing really is that EVs are more expensive than petrol and diesel vehicles. And you can compare sort of comparable vehicles and they can be in excess of £10,000 more. So when people are being a little bit more careful with their money, are they prepared to go to EV? And you do have to think about it. If you've got an EV or you're looking to buy an EV, you do have to think about your journey. You can't just jump in a car and think, well, I'll fill up on the way. You have to be prepared to wait at a charge point, and there might be a queue. So if you can charge predominantly at home, it's probably still cost effective. And if you look at the total cost of ownership of the vehicle, it's probably cost effective. But to charge up on the motorway, motorway services can cost in excess of £70, and you might have to queue. So there's a little bit of an anti-EV feeling. The announcement by Tesla on around the 12th, 13th of January probably couldn't come at a worse time for used values, because they were already dropping. There's a lot more volume coming back into the market. I mean, since sort of 2017, 2018, we're seeing an 800% increase on the volumes coming back in. It's obviously coming from a low base, but they are only going to increase in volume, those vehicles. And as I say, they're expensive. So the announcement of new car price changes, as it happens very quickly and quite harsh, some of those drops, good for the new car world, good for consumers to find them affordable, but caused a bit of concern, I would imagine, amongst other manufacturers that may find their vehicles not quite so attractively priced against Tesla now. And obviously for used cars, particularly for Model Y, which we had some cars that were already above list. They're now, well, they would now be sitting well above list. There's been some pretty harsh movements down on both our used car values and also on our forecast values, which because we have to forecast what cars are going to be worth for the fleet and leasing industry, and we've had to make some adjustments on those based off what's happened in the market to values and what Tesla have done with their new car prices.
And it's something we've talked about on the podcast for the last 3 or 4 months, these Tesla used values coming down. As a result of this price cut, I mean, you have tracked this price decline month on month for certain Tesla models. Would you expect that decline to actually increase over the next couple of months as prices try and find the right value?
Well, some of the Model 3s now look quite attractively priced when you can you're thinking that they could be sort of sub £30,000 for some. That's a different buyer. So
Yeah.
they may come down more. I think there are different. You can't really sort of brand Tesla altogether with this. I think Model Y is potentially going to come down more, and probably for a few weeks and months yet. Whereas Model 3 may start to stabilise at some point, but that is based on price. And as I say, there is a little bit of a reluctance from the consumer to go electric at the moment. And if they are, maybe on a monthly payment, the new car looks better. But obviously, I guess I don't know if Tesla think about this particularly, but when the new car price comes down, if that can reduce the monthly payment, but if the residual value comes down as well, that has the opposite effect. So there's different sort of factors to take into account with that. But yeah, we have reduced. I think the Model 3 has come down by about a third of its value in the past 4 months in the used market. Model Y, the rear wheel drive dropped by over 14% in 1 month in January. That's nearly £7,000. That part of that is what's going on in the market, and part of that would be the announcement by Tesla. But it is difficult to sort of apportion which bit to which, because they were already coming down this month before that announcement. But it certainly won't have helped. It's also worth pointing out that it's not just Tesla that have been affected with EVs. We've seen some larger movements than I would ever have imagined in a short period of time on things like the i3, Hyundai Ioniq Electric, Jaguar I-Pace, even sort of Nissan Leaf, also Audi e-tron, Mini Cooper. They've all come down by a few £1,000s this month. And I think there's buying bans from retailers who just don't want to take the risk on them at the moment. So we are in a little bit of a tricky situation with EVs, but they are the future. They're going to be coming back in bigger volumes. And once those values get closer to petrol and diesel car values, they will become attractive to the buyer again.
And you mentioned buying bans. That's specifically for EV models amongst some retailers that you're seeing.
Yeah, definitely. And especially ones that have got a lot of them in stock already, because they paid high prices for them previously. Prices have come down. They don't particularly want to adjust retail values down. So they're in a little bit of a tricky situation where they know that they've got a lot of cars, they need to move, and they don't want any more of that type of vehicle at the moment. It's just too much of a risk at the moment. But it will come back, as I say, once the prices are a lot closer to petrol and diesel. It will come back. And also the winter can have an effect on consumers because you don't get the charge, you don't get the range. So yeah, if you charge it and you're not getting that range to what you might expect, that can put people off. And there's lots of online forums about this sort of stuff. So the summer will no doubt be better for electric vehicles anyway, from that perspective.
And just briefly and before we sort of talk about the sort of dealers and demand at the minute, we said right at the start, it got the 0.1% increase at 3 year 6. It doesn't necessarily reflect the detail, and EV is obviously the dominant decliner in overall. And you talked about the 5 year 80 up 1.5, 10 year 100 up 3.1, and the strength being in city car, super mini, lower medium, and upper medium has been the sort of standout sectors that have sort of been fairly level or increased in the month. Do you think those figures may have been stronger without what's happening in EV? I mean, EV is obviously pulling down that to 1, 0 to 2, 0 to 3 market, because that's dominantly where those vehicles sit. And they don't sit necessarily in those sort of city car, super mini, lower medium sectors either, do they?
No, if you take out electric, or if you look at just petrol and diesel car values, the figure at 3 years 60 is a 0.4% increase rather than a 0.1% increase. Older age is not really affected because there aren't that many EVs within those older ages. 1 year old, it's a 0.2% movement down for petrol and diesel combined. So so it is stronger than without them. If you look at all the other fuel types as well. So petrol and diesel have been performing well. The hybrids haven't. They've come down slightly more, but they've again not been doing too badly. It does seem to be pure electric that has been the most hit. The retail market for petrol and diesel has been really strong, and that's what the dealers are going out and buying, and for what they can stick on their forecourts rather than EVs at the moment.
And I suppose in many ways we're in this third year of production shortage now, and that's where the market is obviously already declining overall, and the fuel share of petrol and diesel has also been declining, and that's what, like you say, if they're nervous towards buying EVs, they're all obviously heading towards that petrol diesel, aren't they? So on that point, you talked right at the start about, over the months it started to increase in terms of both values and auction performance and driven by demand. Is that what the dealer network's kind of telling you now? And do you think there's an element do you think they should have bought a little bit of that cheaper stock earlier on, maybe last year, ready for this year? Or do you think they've done the right thing holding back?
I think they've done the right thing. It was too much sort of conjecture on it, really. It was too difficult to predict how January would be. So I think by not stocking up you can always look with hindsight and say, well, I wish I'd bought some more in December. But if January had not started or had not been good for them, not good for retail, then they would have been left carrying a lot of stock that they couldn't move. So I think prudency was the right thing to do, and I would probably say that going forward, the same thing really. Yeah, buy maybe more than they have bought previously, but I wouldn't overstock. Just you never know with the economy at the moment. I think it's improving. The signs are there that it's improving, and used cars are always popular when times are difficult. So I would say that I don't think they should have stocked up any more than they have done, and they're probably doing the right thing by buying now. Values haven't gone up dramatically in January, so there's some vehicles to be had. New car supply is improving, but as you said, we've lost over 2 million cars to the market. There is still going to be shortages going forward. There's not going to be an abundance of part exchanges and fleet returns coming back in. March will lead to more volume, but I would say for the next few weeks, it's probably more of the same to Jeff as happened in January, really.
And Derren, in terms of values as we go into February, how do you think the next few weeks are going to pan out?
Yeah, I think it will be, as I say, similar to January for our ICE vehicles. I think you might see some going up. Some of those that are close to list will probably come down. But yeah, there could definitely be some, with demand quite strong, there could definitely be, I would say there won't be many drops. There will be, it will be quite a strong month with, values. I would predict probably a small movement up this month on average, but only live will sort of tell as we move through the month. And with EVs, I would again say that there's probably a little bit more to come on some value movements down on some models, not on everything. And as I say, the Model 3 now maybe looks quite attractive to buy, but there is still that consumer wariness about going EV. So I think overall February's positive. I think it will continue as January's done. I don't expect the EV moves to be as harsh as they've been, but I think there will be some continuation of that.
Yeah, and I think, like you say, that some of this stuff is got to find the place. You and I were together this week, and there's ID3s now finding the place in the market around that £20,000 mark. I think I've seen some of the sort of 70 plate e-trons trade at around that sort of 32,000 mark. So there's suddenly become affordable, don't they, to a different market. So some of these things, like you say, suddenly become attractive, don't they, at a certain point in time. We've seen that not just in EV, we've seen that through the decades in petrol and diesel, haven't we, where vehicles just find their point and then become desirable at the right price.
Yeah, and even Tesla's still an aspirational purchase. There's still people wanting to buy that. And once you get below a certain price range and people realise they can afford it, then yeah, they'll buy them as long as the monthly payments are far enough away from the new car. So, or the overall price is far enough away. So yeah, there's some positivity, I would say, around the corner on that, but maybe a little bit more pain to come before we reach that corner.
Yeah, it's a little bit of a short-term pain for stabilisation in the future at some point.
Yeah.
But I mean, again, like I say, I know you're busy at the minute, and it's busy around what's happening around EVs and all this that's taking place. So it just remains me to say thanks again for joining us. I know you've had your webinar this week that you've shared more insight on there that hopefully people have managed to join that and catch up on that one. And the editorial is out now today, and they can find that at cap-hpi.com, or it'll be on your social feeds anyway, won't it, Derren? So
yeah, we'll be on LinkedIn. Yeah,
perfect. So again, thanks for joining us today, and thanks for the very useful and insightful update that many will be enjoying this morning.
No problem, a pleasure.
Many thanks for joining us, Derren. Really appreciate it. And thank you all for listening today. This is one of our special weekday Motor Trade Radio podcasts. Philip and I are back with the headlines this weekend. See you then.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, and on your podcast feed. In the meantime, if you'd like to get in touch with Philip and Curtis, come on the show or send a press release, then email them at motortraderadio@yahoo.com. You can also join the Motor Trade Radio, LinkedIn and Facebook groups, or follow the podcast on Twitter. You've been listening to the Motor Trade Radio podcast, bringing you all the chatter that matters.